Okay, another quick one here. I just want to talk about these markets in general when it comes to the way people trade this stuff. So you've got two types of people. You've got a lot of people who don't really understand trading and don't really have an interest in learning it, and they often just kind of hear about something being good, right? Whether it's Tesla or just any stock, Microsoft, just something, it's doing well, so they'll often invest money into it, thinking, okay, well, great, like this is doing well for everybody else. I want to join this bandwagon. And oftentimes, I mean, what they're considered are as the retail traders. So they're the investors that are putting their money in and hoping for the best. And then you have the other side of this, which is the traders who, get up every day or sleep with the charts on, or with the alarms on, and in order to take positions in these charts to maximize or essentially make a living off of just trading. So now, in order to do this, you can't really just spot trade and make a living off of spot trading. Making 2%, 1% a day, you know, unless you're trading with 10 million or $1 million, is not really practical, right? You're just going up a percent, down a percent, 2%. It's not the way it works. So exchanges offer, leverage and margin to people. So what that is essentially the exchange is lending you money to take a higher position using your balance as a collateral. So let me give an example here. Let's pretend you only have $1, right? And you get onto an exchange that offers leverage. Now you want to just gamble like a degenerate here, and you're going to go on Bitcoin and take your $1 and you're going to 100x, right? So you're gonna there's this bar there's this trading bar that all these exchanges have that you can drag back and forth from 0 to 100x, which essentially maximizes your gains up and down. So let's pretend right now that we're taking 100x on a Bitcoin at this price right now at 78,734. So boom, we just got in with our $1, and we think the price is going to go up. So we're with our dollar now, and we're watching this chart, and this is on just a 5-minute frame. And this is often what traders are doing too, is on a lower time frame, 15-minute, 30-minute, hour, 4-hour, whatever it is. They're jumping in at high leverage, so with $1 or $1,000, whatever it is, and they're trying to make okay, so if I make a 1% on 100x position, right, that means I just made 100 times 1%, so 100%. So now my $1 is $2. As soon as I get here, I've made 100% profit off that little move. So now let's say I hold on to that, right? And now I'm like, oh my, like I don't want to sell my $2 yet because I think it's going to keep going up higher. So all right, now 2% comes in. Now you're at you're 200% up on your money, because 2 times 200x, right? You're 200x. So every 1% that this is moving, if you're on 100x, you're gaining another 100%. Up to here, at this point now, I've made $5 off of $1. Now that's if I'm long, right? Now let's say it goes against me, and let's say this breaks down here, and we drop down 1%. Well, at this point, that's where the exchanges make their money. Okay, so they've lent you the $100 off of your $1 to get into the market, saying it's going to go up. But if it goes against you 1%, they liquidate your dollar. So they've taken your dollar, unless you add some what they call margin to the account, what can bring your liquidation price down a little bit. But on 100x, you're gonna have to keep adding $1 real fast before you get liquidated completely. So anyway, my point is, let's say you just don't have a stop loss. If this thing goes down 1% on 100x, you're liquidated. If it goes up 1%, you've doubled your money. Now, my point in this all is, it's very important, is that this whole market is essentially, Binance and Bybit and all these exchanges that offer people high leverage, very high leverage to trade Bitcoin and everything else. So every single day, every minute of the day, people are taking like large 50x's, 20x's, whatever it is, on these markets, and then they're trying to make these waves up. So 100x on, and I get 20%. What is that? 2,000%, right? So if I put a dollar in and get up to here, I make $200 on $1. That's how crazy these markets are, and the exchanges at the same time that offer it. But like I say, one move down and you're liquidated. Like, you have to, if you're going to trade on 100x, you got to get in right at the perfect time, and then expect it to go all the way for you to actually win. And very rarely do you win, because like normally the market just kind of goes boop, just down the littlest bit, and you get wiped out. Unless you're short, and then in that case you win, because short means you're winning with the price coming down. And there's also high leverage. You can bet on the market coming down. It works both ways. You can long this 100x, or you can short this 100x. And that's what's happening every day. Now, my biggest point in this video is that the majority of the crypto market is leverage and margin. It's people that are getting in with, let's just pretend you got $100, just regular old guys, or $1,000, and they're gonna just it's like going to a casino, right? They're gonna gamble with that $100. But a lot of these guys are going on like 50x's, 40x's, and 90% of them are going long. Like, so many people, especially now in the last couple of years, everybody's been long. And there's guys that I recall watching down here who were taking 150x leverage positions on Bitcoin, and they held. So imagine holding a 150x position from 25k and getting up to 120. Like, I don't know where they sold exactly. I didn't pay. Let's just pretend they sold here at 154. Well, times 150 times 150 is how much profit they made. So that's the exchanges that have to pay that out, right? All this leverage, it's just borrowed cash, and the exchanges have to pay that out. So this guy that was on 100 and he wrote it up for all that time, they have to pay that out, and most people are long. So what happens is, there comes a point in time where people have held for too long and they haven't taken their profits, or they continue to add more money into the market expecting it to go up, which brings up their dollar cost average. The only way to clean this market out and to bring real money back into it, to make it naturally grow without leverage and borrowed cash, is to wipe the old money out. So these guys have all made money long, and all the people short who went short in here lost. And now what happens is, all the people who are going long are going to start losing to people going short. So you can't look at it as much as what the news tells you and how great you think a crypto project is, because if there's too many people that are high leveraged on that project, the markets can't just pay them out. The market isn't a money printer, right? It's just there. It lends people money. But when there's a point that there's not enough money to be paying out longs, it has to take the money back from the shorts. So consider that we've had 3 years of up, and how many people are long in this, and how many people continue to go long, and they're the ones adding money into the market, which will now pay the shorts, and then add all that money that essentially paid these longs all along in here. If that makes sense, right? It has to go back and forth. You can't, if the market just permanently went that means that money just has to be endlessly printed, and these exchanges just have to keep giving all the high leverage people free money. That doesn't exist, right? But it doesn't work like that. At some point, these people have to be taken out of the market, so that all that money that they've held and didn't take profits on goes back into the market. And at some point, there's a reset then. And then at the same time, when there's the reset and a lot of the leverage is flushed out, new money will also come in because you're at a support level in the chart, right? That's when, spot, people are going to start buying spot bags and not just leverage and holding on to the stock and expecting high gains. Whereas right now in these ranges, it's a battle for leverage. Okay, it's 100x's, 50x's, 25x's, and on altcoins 20x's, and they're all battling each other. And 90% of the market is long. Most people always go long, thinking I'm going to go make money going up, right? So the shorts will eventually take over, and it's not just going to be a little dinky correction like we've had now. This is only a few months, right? It's nothing. You can pull up other charts of real assets that actually do correct. Here's oil. Things just don't go up forever, regardless of what they are. It doesn't matter how great, how limited the supply is. There's only so much oil on the earth. There's only so much gold. All these, but it doesn't matter. There's people that trade it on high leverage, and oil is a great example. It's just gone. It's just done nothing but go down, right? For years now. This is 6 years of down. And if you don't think that Bitcoin can spend a year or two coming down, that's where the problem comes in. You can't just think that the money endlessly flows into markets that are crypto, especially. This is all risk. And again, you can't print money endlessly to pay off people that are taking gambles all day long on an asset that has no real intrinsic value on the global economy. Like, as great as it is to be able to send money back and forth, to store your value in digital assets, at the end of the day, what does it mean, right? Nothing. So first of all, don't ever listen to news. Start understanding these charts and start realizing that, traders fight the retail, and the news is not helping the retail traders one bit. It's totally working against you. So just understand, that markets in every single sector will always, have these moonshots and then correct. And the corrections aren't just 2-3 weeks or 4 months down. Sometimes they are painful, very painful, especially in the stock market. I can pull some stuff up here, here, look at this. Come on, let's just pretend, right? We're going back in time on Canopy Growth Corporation, weed, right? Boom, $15, $120, $800, right? Tell me at $800, you ever think, okay, this thing's gonna come back to $1? Tell me that, right? And it's just a company. But it's like every other asset. There was a lot of leverage and high leverage people and just tons of retail traders coming in here, and too many people long, and then boosh, here we are at $1.50 from $800. But watch, it'll catch support. All these people are so mad now. They're so pissed off, right? They thought this thing was great, and Bitcoin will be the same. It'll cause so much pain, and crypto in general will make you say, screw this, I'm done. And then when you say, screw this, I'm done, it's when it's going to start to move back up. And then you're going to start to look at the news and say, well, oh, fuck's sakes, I got to get into this. Don't do it. Just always keep in mind, leverage. People are leveraged in these markets. Always look for your entry times. Time them well. Don't moonshot. Don't get into charts when they're doing this here, and then the news is yo, this company's so amazing, yeah, get in right here, and then you ride a little wave up until you get just flonked on for 3 years. It's not worth it. Anyway, I hope some of this made sense to people. It's important information for all traders. too many people, in my opinion, think that oh, this is such an amazing project. Oh my God, like this is gonna be like the next Bitcoin. This is gonna be the next this and that and the other. It doesn't fucking matter. It doesn't matter. What matters is how the money is paid out to the people in the market. And you can't print money endlessly and just pay it off to investors. It doesn't work like that. So that's the reality, without being too harsh about it. I'm gonna again point out Bitcoin, or we'll look at BTC. Bitcoin is looking really crummy, and I wouldn't be in this for very much longer. You know, we've got a little bit of a move up here. I wouldn't be degenerate playing up to 120k again. I would be looking at this 92, 94k. Maybe we fill the gap. There's a gap right here at 109, maybe. But then we actually roll over. So maybe we fill this gap really quickly. We come back down. We head and shoulders, and then you're looking at we're starting some pain here for a couple of years until everybody's just sick and tired of crypto, especially altcoins. They're gonna get destroyed. They're gonna see all-time lows. Let me pull this one up here, near. Like, I've always been bullish on near, right? But I can't anymore. That the chart has spoken. We didn't hold this. This white line was a key area in this chart. We had to hold that. We needed to bounce here. This support should have been good. It should have held these old areas, but it didn't. And now the facts are that we're chasing wicks from the past. Now what we're going to have is today, for example, everybody sees this big red. They're going to all take high leverage positions, 30, 40, 50 X's, right? On near, expecting it to run to maybe even the trend line. So 50 times 50 on whatever you invested, it's pretty hefty gain, right? And then they'll put a stop loss somewhere in here, like maybe below this wick over here, saying, okay, the price isn't going to break this wick. Right? So if I take a long now, I don't think the price will ever get below this wick. So you got to think there's going to be a million traders today with their stop losses right here, just below. The exchanges know this. The exchanges know everybody's going long. So this is a huge range. It's going to get hunted. It's like stop loss hunted out of this market. It's going to go either boop and take it right within this week, or it's going to tease you and get more longs in and then gonna take it. But near is going to make 54 or 55 cents. Like, mark my words, it will do that. And just like I've seen in 1,000 other charts, it will leave like this little wick right here that only the first entrance got into. Like, I bet you money that's what's gonna happen on near. So I would be waiting on, total crypto, BTC, to make their corrections to maybe break out of the, like, maybe it comes down here. It'll take this wick. Let me just draw this out. What I think it'll do right now. Like, I think it's going to do this. It's going to tease you bullish, but it's going to BART, essentially BART pattern. And then it's going to steal the wick right here. No, but it's not going to give you the full dump. It's just going to claim this wick here, and it's going to liquidate all these longs that took a long right here today and had their stop losses right here. Then it's going to give you another bounce, then might break out of the channel, hit this resistance, 189, $2, this mega resistance. Now then we go like this, and then we start doing this slow down, boring chop, right? So again, even if you break out of this trend line, you have to wait for some confluence. You can't just say, oh, we broke out, now we're going up. So you got to wait for this resistance at that point, and then you have to just kind of wait for this, and we will get into this range. It's pointing into 2027, but it can be hard on different time frames to accurately judge that. But this is the technicals of this chart, and it's no reason now to get in now expecting it to go like this. And again, I want to point out that a lot of people will have their stop losses set right here at this point in the chart. Everybody going long, 10x, 20x, 50x, 100x, whatever it is on near. Well, you're not going to be 100x because you would get liquidated before. That's still 20% down, so even on a 10x you would get liquidated pretty quickly on that. You would have to add margin. But regardless, there's a lot of people with stop losses in this range right here, thinking this wick will never break, but it will. And so will this one, and eventually this last one. Just let the leverage guys fight each other, and let the money, in particular from longs, will come into this market, and they'll get liquidated by the exchanges, and to a point that not many longs are coming in anymore, right? And there's shorts are getting paid too much, and then the exchanges and traders start coming in and they go long, and then the shorts get liquidated, and then that allows this to do this, and that's when you make your real money. Okay, let's just, last point here, let's pretend you get in today and you want to make this to this trend line, right? You're looking at like 180, 190%. All right, but if you're smart and you're just patient, you just sit back right now, and you get down to here again, and then you get to this trend line, 500, 400%. And at that point, you can look at 1, 2, 3 touches to the trend line to break out of it to a 10x. And you have to be smart. This is with every asset. Just let the chart play out, let the leverage get cleaned out, let the money from the longs come in, which allow the market eventually to go poof. All right. I hope this helped. I hope everybody watching, if anybody watches, has a great